The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's make some money. Let's see. As the title says, I'm high on weed, weed stocks. The big boy in that space is this company here called Canopy Growth. It is the market cap leader, and market cap means, in short, this particular company has attracted more money in the form of stock purchases than any other stock in that space. So, as far as the big boys go, the whales, this is the one that they like the most. It's a Canadian company, or let me say Canadian-based company, but they are trying to conquer the world in this cannabis space, because what they do is they buy interest in other countries, other companies around the world. So they seem like they're going to corner the market, or not. I'm not going to say corner the market. They're going to get a slice, a cut of the profit, pretty much, wherever they can. So so they're big on forming partnerships with other smaller companies and stuff. So this is one to follow. So as we see here on this chart, let me open it up a little bit more. It was riding high in this $56 area, close to just let's say $60 area, back in October of 2018. So that's what, a year and a year and a quarter. It's been kind of been has not made a high since then. But we see here we have a nice significant downturn. And as far as technical analysis go, and this decline is pretty much on schedule in terms of depth of the decline. People on my Patreon, they recognize this downward pattern. It's a typical shape in terms of Elliott wave theory. This structurally, it's mathematically, structurally, it's at the right depth. If you want to learn more of the details, get on my Patreon. I'll break it all down to you. You'll have access to me for one-on-one coaching. All right. Okay. So here's what's special about this decline. We're looking at a daily chart. We hit a bottom. A basic rule when it comes to trend rule and all of technical analysis is, when prices go down, they make lower lows and lower highs. Like this high here is lower than this high. And so this was a low and it made a high, but it didn't overtake the previous high. It kept making lower lows, lower than this one, and lower highs. Kept basically snaking its way down. And as long as that movement, trend characteristic remains, then you have to regard it as going down or bearish, okay, declining. As long as that rule of trend is being observed, you can't cheerlead the thing up. You have to let it fall until it doesn't fall anymore, until it violates that rule. Well, we had a higher high here in this area. I'm sorry, we had a high here, we made a low, and then we overtook this high. So this was the first. This move here broke the rule. It broke the resistance uh, trend line that I have here, and it made a higher high. Okay, and so this oscillator is showing us that we got overbought. We made a higher high. Then we momentum went down to the extreme state of oversold without us making a lower low. So you have this trend right here. Every one of these lows is higher than the previous one. Every one of these highs is higher than the previous one. And we had a big pop on Valentine's Day, supported by a big volume spike here. That strongly suggests that the trouble is over, that it's safe to enter. But real confirmation, better confirmation would be waiting until it exceeds this point. So that's the leader. And what happens usually is not now I'm going to go on all the time. I'm not going to say usually. Stocks trade like their peers in their industry group. Okay, so if business is good if the macroeconomics supports business, strong business activity in one industry or one company, the presumption is that that same macroeconomic environment will favor all businesses in that same industry. That's the way Wall Street will look at it. So even a company that hasn't been making money, if the opinion is that it's going to shine, that the sun is going to shine on that industry, money will flow into companies that have where their accounting records don't look so hot, don't look so strong. I'm not talking about anything illegal or questionable ethically, but just in terms of poor performance, in terms of sales. Once the opinion of Wall Street changes to be one of optimism for that industry space, they'll take a chance and they'll throw money at companies that aren't even making money. So that's like one of those primary differences between technical analysis and fundamental analysis, where the fundamental camp will wait until the records or the earnings come in to validate that company is worth your money. Whereas we recognize in the technical camp that money will flow into the company before the facts come to back it up. So this is a very good sign. This volume move here is a very good sign. In fact, all of these big green volume bars, these bigger ones you see here, came from the moment the price hit the bottom. So big money stopped it from falling. You don't see in the other green bars you see as high as these are way back here, and that's the people that were buying at the top. Okay. So the people that were buying up in these areas, they didn't get rewarded, and then it flamed out, hit the bottom. Now we're here. Now there are others in that space. Oh, I'm sorry. Oh, one more thing about Canopy Growth. Canopy Growth had an earnings report that came out on Friday, and that's something that the fundamental camp, like I said earlier, that's what they rely on. Well, that report was pretty positive. It showed growth, revenue growth. Okay, so there were some positive aspects to it. So the fundamental camp would argue that the price popped because the earnings report was good, but we on the technical side, we argue, well, it was already, money had already come in to stop it from falling, and it was going to rise anyway, whether that earnings report came out then or not. So, it's a dog or cat, dog chasing tail. We fundamentalists, we technical traders will never be able to make our point, and the fundamental traders will never be able to make their point. We will always argue that technical side versus the fundamental side, but don't get caught up in that. At the point in time, the takeaway is there are points in time. There are points in time when both the fundamental camp and the technical camp agree on buying a particular stock. And when that happens, there's nothing that can stop that stock from rising. And I'm telling you that there are strong technical reasons to buy this stock. And Wall Street is in love with the earnings report that came out on Friday. So the path of least resistance to canopy growth right now is up. Okay, moving down the line. Oh, I'm sorry. One more thing. At $60, um, I'm saying that this high is going to be taken out. So we're going significantly above this point. I don't want to. I will. I will make a price projection later. I made one on the brain trust. I'm standing by that. But the main point is, if you're a hodler or buy and hold person, and not a day trader, there's no reason to mess around trying to. If you don't have the skill to make these price projections, there's really no reason to try to outsmart this thing. This would be, in my opinion, again, talk to your financial advisor. This would be a good buy and hold candidate. You know, try to hold on to this one for a while, because it's going to run. It's going to go a good ways. Okay, I think by the time it's all said and done, I mean, we talking. I'll do that in another video. We have closer, not quite a penny stock, but closer to let's see, cannabis. This one we're talking about $22 for this one, for canopy growth. For this one company here, HEXO, it's also in the same space, and we're looking at a weekly chart here now. I'll go down to a daily for a minute, but this one jumped out at me. You see here, every candlestick is making a lower high. It's like walking down the steps. Every high is lower than the other one, except for this past week. This candlestick here, what's special about it technically, from a technical analysis point of view, this is called a bullish engulfing candlestick. It made a lower low, but it also made a higher high. So the price whipsawed in the same in this 1 week. It reversed course, and I'm sorry, it broke the rule of trend and made the higher high all within this week. And I'm telling you, it's not a coincidence that this change happened in the same week that the industry leader, Canopy Growth, had a positive earnings report. I never looked at the daily. Let me take a look at it. And what day did this spike happen? On Friday, Valentine's Day, the same day as Canopy Growth. Look at this huge candlestick. So this is HEXO, and HEXO is for people that like trading around down in the penny stock area. The low of HEXO was on the 10th. So what would that be? That was Monday. And then it popped on Friday when the earnings came out for Canopy Growth. And I don't know when HEXO's earnings come out, because if you're a fundamental person, you'll look it up. I'm telling you that industries move together. That's what Dollar Will is telling you. That a company, if it's doing well, if the market cap leader is doing well, Wall Street will pour money into crap. If it's in that space, the thinking is you can't make all the money alone. If the macroeconomics is loving that space, you can't make all the money alone. So people start betting on basically everything in that whole sector. And when you buy an ETF that focuses on, say, cannabis or weed, that's what that ETF is doing for you. It's picking lots of things in that one space. So just know the takeaway is that whole industries go up and down, taking the garbage with it. The common saying in the market is the tide raises all boats. Okay, the good ones and the bad ones. All right, this is nice. It's got a little doji right here. And so this doji, this one here with no fat body part, shows that the price opened and closed at the same point, just about at the same point. At 9:30 in the morning, there was an open price. At 4 p.m., it closed at around the same price. And so that means that the Bulls and the Bears were in perfect agreement about the value of the thing. And we know that Bulls and Bears can't stay friends long. And pow, we went from the opposite of total agreement to one side winning overwhelmingly. So that's the way it goes. You got a huge volume spike right here on Hexo as well. And what's interesting or attractive about Hexo is this is where it fell from. This high is from April of last year. We're talking $8. This thing is like, it started at $1.22. So we're talking about Hexo if it this thing at around the $13 level, we're talking about from this high would be $15. It could get to that level, to that $15 level. Why am I making a big deal about that? Because from this point, we're talking about a 1,000% gain on your money. Okay, so that's a lot of money, 1,000%. So that's the benefit of buying some of this stuff on the low end. Let me see. Yeah, I just jumped up at a monthly. Yeah. Let me see something here. Looks like it's breaking it, or it has to break this candlestick for the month, but it's going to do it. Certainly looks like it. I wouldn't bet against it. I would not bet against it. So that's Hexo. I'll be checking the chat soon. Hang on, folks. If you got questions over in the chat, get them ready. I'm not even looking at it right now. I'll get there. Man, this looks good. The final one is Aurora Cannabis. It's also in that area where people who like to play buy the low price stocks. So, it had a low of $1.43. And let me see from where did it descend? I think we're talking about October 2018 and $12.53. And it is going higher than that. This high here is so same thing. Can you get to the $15? Absolutely, easily, and going above that, a good bit above that. So you talk about a potential 1,000% gain here. Okay, and I'm being conservative with that. And technically, what's attractive about Aurora Cannabis is this doji here. It's called a dragonfly doji. I'll put it in the chart for you guys to read about it. It says a dragonfly doji is a type of candlestick pattern that can signal a potential reversal and a price tend to reversal in price to the downside or upside, depending on past price action. Meaning, whatever it was doing before, it'll reverse it. Okay, it's formed when assets. All right, I'm gonna give this to you to read it. It's my favorite site here. Again, don't be cheap. Get that training. Let me see. All right, drop that in the chat. Got Aurora Cannabis. Got the doji. We talked about that. Let me see what the high was. Yeah, I think I covered that. Yeah, around $13. Yeah, yeah. So this is all looking good. Um, this is the time to jump in. You know, I would definitely abandon ship, of course, if it made a lower low than here. But this is looking pretty strong, especially when you see a lot of things in the same industry all going up together, and the volume looking good. So keep your eye on weed. Don't be shy. Talk to your financial advisors about how much risk is enough for you, and how much you should be putting in. But I tell you, when these things, when you see big volume coming into stocks, the price can kind of get away from you. These cannabis stocks should be watched, very closely, because you can look up and this thing could have reached those levels I was talking about, where you have a 1,000% gain. I mean, you could look up in a couple of months, by spring. I mean, it can move really, really fast, especially as the major indexes roll over. And I think they will. Stay tuned to this channel for more information about some danger lurking for the S&P and the NASDAQ, and those high flyers, those Facebook, Amazon, Netflix, Google, the NASDAQ stars. Um, there's some danger ahead with that. But I think this week is going to be a strong week for the S&P. It may be the last strong week, but it looks like we should have a strong week. But I wouldn't let that lull me into a false sense of security. So let me see who's rocking with me. Ty City says, "What do I use to trade?" Yes. What do I use to trade? I guess I don't understand what you mean by that. I use man, I got accounts everywhere. I trade Forex, so I'm with Forex.com. I'm with Charles Schwab, and I'm with another small rinky dink broker that I joined years and years ago when when I was just starting out. They're not even worth mentioning. I got a kind of a long term park money over there, and I have a Robinhood account. When I was just trying to experiment with some stuff, and they didn't offer any commission, so I said, why not? Um, yeah, so that's what I do. Yes, I use stop losses. I use stop losses, but I use stop losses combined with my Elliott wave theory bias, which it helps inform me about where to put those stop losses. Okay, and you got to know some price action theory to know where to place the stop safely as well. So yeah, that's what I try to do. Try to get in at a point where the odds are in my favor, and you don't take too much of a loss if you're wrong. That's basically it. Let's see. Learning every day says, what would be a good app or investing site to buy this stock? Any broker, all brokers would have these. They should have these, but um, will be a good app. Like I said, I like Charles Schwab. The big boys, the big companies are making it real hard for those very small companies like the Robin Hoods and like that, because your big brokers, even like your trade station, your Schwab, your TD Ameritrade, these companies are eliminating their commissions, and that's going to make it real hard for your smaller companies like your Robin Hoods to stay in business. And I'm in Robinhood, but you're going to see some of these small discount trading companies. They're going to fold. they're going to fold, because it's once the big boys also uh, eliminate their commissions, there's no reason to be on a small trading platform. The bigger companies, you're going to get your trades executed faster. They may even have some educational opportunities there. The forums are going to have more experienced people in it, so you'll get better information just by hanging out with that crowd. The charts that they give you, the free charts they give you, are going to be of a higher quality. It's just so many reasons to be with a bigger company if all things are equal. And so, to answer the question, where to go, I say don't worry, don't get caught up in that question. Just start. If you haven't started, just go where you're comfortable. I would say if you really think you want to do penny stocks and stuff, Robin Hood might not be the place. But my favorite would still come down to either Schwab or TD Ameritrade, and I'm biased in favor of Schwab because that's where I've been a while. I know as far as mutual funds and ETF goes, Schwab has like low fee options. There's some, because a lot of these ETFs and mutual funds charge you fees, and Schwab has a good selection of low or no fee choices. And I've never tried to find a stock or a fund on Schwab and not been able to find it. And that's never happened to me. So I'm biased in favor of that. But I've consistently read good things about Thinkorswim. That's what I'm saying. I keep, TD Bank owns Thinkorswim. So I would say Thinkorswim or Charles Schwab. Thinkorswim or Charles Schwab. And I'm biased in favor of Schwab because that's where I've been. I've never had a Thinkorswim account, but everything I've read about it says that it's top flight. And if those and trades, if you're really deep in this as a trader, TradeStation has been the king forever. But TradeStation used to have a high minimum deposit. Now they don't. So now the king of the block, where all of the professional traders are, not all, but you know what I mean, the lion's share of the big money traders they're on TradeStation. And now TradeStation is coming down to the Robinhood area, dropping their fees to induce people to come on the big field with the big boys for the same low or no commission as Robinhood. So yeah, if you're on Robinhood and all those types of places, you might want to be thinking out of the back of your mind, okay, where am I going to go if I get a story, wake up one morning and find that, these smaller companies brokers are shutting down, kind of have it in the back of your mind where you want to go. Let me see what else. Do I think this is skipping tracks? Do I think the stock market will crash this year? A better question for me would be, do I think it's going to crash within the next 30 days? I think so. Okay, but I'll be, and that's even being conservative. All right, but let me do my homework. Let me make a video on that as we get closer. I don't want to be out here, continuing to say the sky's falling, but this is not a time for people to delay talking to a financial advisor, making a plan to get some basic education about how to read a chart, to get your questions answered about what to do. At least get some ideas so that when you go to your financial advisor, you can at least, take some or write down the ideas you hear me say and other people say. When you go to your financial person, you can say, well, what about this? And then you can hear like the uber conservative information you're going to hear from your financial advisor, and then you make a decision, but this is the time for you to make that a priority, because things are going to move real fast. Okay. Ty Cities has a 401k through Schwab. Yep, so do I. I have 401k, what a rollover IRA. Let me put it that way. You know, when you leave your job, that's another thing. You guys have had multiple jobs and you left like retirement accounts at past jobs. Don't sleep on that. You know, this is a time to get all that money under your control. That job you had 3 jobs ago, where you got money in the retirement account there. Do not abandon that money. You can roll all that over into one account. If you're with a Charles Schwab or something, you can tell Schwab about it, and they will start the process for you. They'll call that other um, money manager where your other money is sitting, and they'll walk you through how to transfer it over. But you can't get it and then give it to Schwab. The destination institution has to coordinate the transfer in order for there to not be any tax implications. You can't take the money in your hand. It has to go from broker to broker, from institution to institution. You can't touch it. But you don't drag ass on that. Because even if it's just a little $10,000 because you didn't work on the job long, that is enough to become a mountain if you invest that right. And with the money making opportunities is coming with this wealth destruction of this decline. Not everybody's going to lose money, okay? But the people who know how to trade and know how this market works, I'm gonna put myself in that group. I'm gonna say we know where to put the money, but of course, your financial advisor should be the main quarterback of it. All right. It says I'm looking forward to rolling it over into a Grayscale crypto custody account. Okay, learning every day. Wow. Okay. Well, if there are any other questions, shoot them forward. If not, I will say stay tuned here this week. I'll have much more than I have done recently, only because I think we get real close to this thing rolling over. And so I'm going to post more frequently, and seriously think about joining somebody's group, where you can get some more specific information. Most of this stuff comes with a fee. Mine is $10 a month. That's nothing. People throw that at the wall in super chats all the time. So that's nothing. So at least you'll begin to learn, and then you'll have also someone you can have one-on-one conversations with and one-on-one training with. So get, like I said, if not me, pick somebody. It goes a whole lot better if you can be in a community learning with at least one person or a small group. And I got a small group on my Patreon, and people over there have different interests. Some folks are trading crypto. Some folks just want to know how to manage their retirement account better. Other folks are penny stock traders, and some are like me. I'm mostly in the forex and things related to the dollar. So if it's a stock that I'm trading, it's usually something that's related to the dollar, like gold and oil. But it doesn't matter. Whatever that your strategy is, it all comes down to the common thread between all of it is learning how to read a price chart. You got to get that nailed down. But all right, fam. Thank y'all for riding with me this midnight. Got this one in. Stay tuned for more. I should be putting something up every day this week. So stay tuned. Peace. Oh, okay. So got one more. Oh, Matty Ghost, what's up, bro? So not trying to get off subject, but are you gonna do Forex videos? Um, I bring up dollar charts from time to time. What the dollar is doing. But in my on my Patreon, there are people that trade different forex pairs, and we get deep into it, breaking down what's is coming up, say the week ahead. Like that's what I'll be doing tomorrow with my group, breaking down the week ahead, and everybody's looking at a different pair, and of course, breaking down a technical analysis approach. You know, so Maddie, what's up? What's up? What's up? Maddie's the penny stock dude. He's killing it. Maddie Ghost in the chat there. He's killing it. He's killing it. So yeah, Maddie, we gotta chop it up soon, man. Update time, bro. Update time. you know. But all right, y'all. Later.